Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 1st, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Happy first trading day of December, the last trading month here of the year. We have new pivots for the new month, and one of the things to keep an eye on here is how wide the previous month's range was here. That wide range led to the development of a very wide pivot range, and typically speaking, that would suggest more of a range bound or compression month ahead. Now, that doesn't mean we just go sideways here as we've been. In order to go range bound, sometimes you got to go up, find the high, drop, find the low, snap back, and now you have yourself a range to do business in the rest of the month. So we may see some high range move here out of this range. It could be the first 1 to 2 weeks of the month, and then from there we go quiet into the rest of the month. So wide trading range for the month would suggest range bound action up ahead for this month. One of the things we want to watch is the previous month's high price here and the close, because they're so close to each other. You would watch this area for rejection, which would open up a return as deep as the previous month's midpoint. So in the most bearish scenario here, we would see a rejection of prices above 4,600 for a return back toward 4,400. Now, compression here as we head into today's main event, which is Fed Chair Powell speaking 10 a.m. Central here this morning. That could provide some volatility that leads to a bit of a breakout from this range. Again, we haven't really seen a strong rejection up here yet to suggest that we would drop away from these levels. So at the moment, we're still range bound, which means range bound with a drop could still lead to a buying opportunity for a continuation until we do see a strong high of some sort. A strong high right here at the 4,600 edge or 4,630 zone would be right in line with the potential for a snapback to the middle of the range. Again, middle of the range would be about 4,400 down the way. So right now, range bound here within the range as we approach Fed Chair Powell here at 10 a.m. Central. Looking at the NQ, wide range of price action in the previous month as well. Right here, that's November 1st. That was the last FOMC date, and we blasted off to the upside, and now we had 2 weeks sideways here holding within this narrow range. Here's your wide pivot range for the month. You have this wide range for the previous month, and again closing near the extreme of the range. So if we do see a rejection up here, we could snap back toward the mid and then fall in place here for more range bound action into the end of the month. So we'll see how that continues to develop. Right now, showing some signs of weakness here for a push downward. We continue to see this range develop here. The high 16.2, the low 15.8, 400-point range over the last 10 or 12 days. We could see continued development of this range before we're ready to see expansion. But when we do see expansion, expecting about 1,000 points of movement. All right, looking at crude oil. Now, crude oil had a tremendous rejection in the previous session. Price went up toward the $80 level. We mentioned 80 is kind of the last line of defense for bears, and bears were able to defend. You see this upper line right here is right on that line for the rejection here, and we could be headed much, much lower. Now, the previous session was over 4 points in range. 4 points in range is kind of a high range ADR for the day. We don't have many of those that happen, but we do have several here that have developed over recent times. 4-day ranges are about as big as it gets, and usually you see a lower range day that develops the very next day. So if that's a high range day, lower range here. This one was actually a little bit higher because it was a rejection. Here, a little bit lower as well. There, a little lower. There, a little lower. So today, expecting about 2 points of range, maybe 2.5 points of range. Given the fact that we've seen a rejection on the highs, any pullback could be seen as a selling opportunity for a continuation down. Eventually, what we're looking for is the next primary wave of weakness downward. That's going to take us into 70, which is the previous year's low, and 69.69, which is the previous quarter's low. So on this line, that rejection, we're looking for this drop up ahead. Now we do have a 100% extension here from this key range edge. that would be right at $68. So basically 67.97, call it 68. That's a good zone, a good target up ahead for this month. And again, lower value relationship for the new monthly pivot. So any pullback, again, selling opportunity for a continuation down until proven otherwise. Looking at gold now. Gold's about flat at the moment. This one's had a tremendous rally. First, down here off the previous year's close price, big time push to the upside, holding the 1940 back to 2020 and then gapping up on a rollover and pushing higher. Now, one thing we've mentioned before, 2080, significant resistance over the last 4 years. Anytime we've come up to that zone, we've watched, anticipated rather, a reaction or rejection that would bring us back down. And so far it's been in play that way over the last 4 years. Not quite at 2080 just yet, but sitting around the 2060 level. 2060 is a level there that price doesn't hold above very often, so at least not for long. This year you can see only a couple of days for a few minutes before it rotated down, one full day and a couple minutes here before it rotated down, and here we have several days where it's holding right around that 2060 level. So very soon we could see a reaction or rejection of this edge that would bring us back down within the range. Now 2080 is the big market structure edge. The other side would be 1680, and then the midpoint would be 1880. 1880 is the midpoint of that larger range. So if we do see a rejection here, ultimately we could see a medium-term rotation back toward 1880. The first big target, though, will be back toward 1950. That is your VWAP for the year right now, and it's also a rising 200-day. So 1950 would be the first target. 1880 would be the follow-through target if we did get a big rejection at this edge sooner than later. All right, looking at the YM. The YM right now has been on fire, about as bullish as it gets. There's been no counter trend rotations to speak of, and we've had, a few days that have just kind of pushed price way up. And then the rest of the days have been filler days with upside bias. And then we had another massive day yesterday that took us to 36K and well beyond the 35.8 level. 35.8, remember, that's the big market structure edge. We are now beyond it. 35.8 is right here. Last time we went right to it and dropped away from it. Here, 35.8 was basically the previous session's midpoint as it exploded through it. You can see here, that's the high of the month. All the way down here, that's the low of the month. The midpoint is here. The previous close is there. And we're above this 35.8. So all of these things right now, especially after such an aggressive rally from the true pivot low, would suggest a pullback and range-bound action this month. That's what that would normally lead to, especially with such a wide pivot range for the month. On the first trading day to close near the extreme, you're looking for a reaction here that would take us back down, and then you find your range and settle in. So again, not expecting price to just explode through 35.8 and extend to the next 1,000 level up. Instead, watching to see if this push above 35.8 leads to acceptance. If not, a failure and rotation back down the range could be ahead as this market settles in heading into the end of the year. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.